So guys, welcome back to Crony Capitalism. Crony Capitalism is definitely back. It's like I said, for decades now, United States has been operating under the guise of capitalism, which is actually crony capitalism, especially as of the last 20 years, you know, with the major bank bailouts and concessions that governments have been giving to the financial industry. Yeah, you got to remember the financial industry trickles down into everything, right? Because it starts with the banking. The banks are the first ones to touch the money. If they're the ones that are experiencing crony capitalism, that means every other business that they've touched has experienced crony capitalism. Why? Because chances are they're getting money that they shouldn't have gotten, or you're having ill-appropriated assets placed everywhere throughout the economy because the banks that are existing are allowed to essentially put that money in places where they might not normally be able to put. Why? Because they might not exist. So what we're going to look at real quick, we're going to look at this clip between Oklahoma Senator Lankford and Secretary of Treasury Janet Yellen on the most recent events in terms of the banking crisis that's already started, that they're quote unquote trying to avert. The problem is this: when you try to avert a crisis and you're doing it artificially, you're still leaving the problem there. You're not rectifying, and you're not actually bringing health back to that industry. You're just hiding the deeper issue by saying, well, let's go ahead and address the symptom. All right, so let's look at this interaction, and I'm going to kind of stop it as we go it through so you can see. I'm going to point some things out so you can see what I mean when I say this is really crony capitalism that we're experiencing.
Don't have time. I need to be able to drill in on a couple of things. Let me start with some of the banking issues we're dealing with on it. Will the deposits in every community bank in Oklahoma, regardless of their size, be fully insured now? Are they fully recovered? Every bank, every community bank in Oklahoma, regardless of the size of the deposit, will they get the same treatment that SVBP just got or Signature Bank just got?
Now, what does he mean by fully insured? So we know that FDIC only covers up to $250,000 per account. Now remember, it's per account. So you can have 50 accounts with $250,000 in each one. And a friend of mine who also used to work in the banking industry, I used to work in the bank as a teller years ago in my early ages of my financial career. And a friend of mine even said, if you add a beneficiary on there, that actually tacks on another $250 for that beneficiary. So there are ways to get more coverage. But what he's talking about is that basically the government is coming in and going to fully cover them. So over and above and beyond the $250,000. Now listen to her explanation why.
A bank only gets that treatment if a majority of the FDIC board, a supermajority of the Fed board, and I, in consultation with the president, determine.
Now listen to who she just said. She said the FDIC, she said the Federal Reserve Board, she said herself, the Secretary of Treasury, in concert with the president. So those are four different bodies, basically, that she says are coming together to go ahead and decide. Now, we know the Federal Reserve is no more federal than Federal Express, right? Or FedEx, as people know it now. Okay, so they're not technically a government entity. They're appointed by the government, the people that work there, but the Chairman Powell is appointed, but they are supposed to be separate so that the Federal Reserve does not get politicized, right? But the FDIC, obviously, Secretary of Treasury and the president, all those are government factions, right? Or not factions, but those are government-driven entities.
The failure to protect uninsured depositors would create systemic risk and significant economic and financial consequences.
So what is your plan?
Made that determination.
Right. So what is your plan to keep large depositors from moving their funds out of community banks into the big banks. We have seen the mergers of banks over the past decade. I'm concerned you're about to accelerate that by encouraging anyone who has a large deposit in a community bank to say, we're not going to make you whole, but if you go to one of our preferred banks, we will make you whole at that point.
Look, I mean...
Now, when he says big banks, he's talking about your national banks, you know, Bank of America, JP Morgan Chase, Wells Fargo, US Bank. These are what are called the big banks, or the banks that are considered too big to let fail, right? So the problem with this is that, think about it. First Republic is a plain vanilla bank. They're having the same issues that these other banks, Signature Bank, SVB, Silvergate, they're having liquidity issues, okay? Now, the problem is this. There are 11 banks, which include some of the ones aforementioned that I just said. 11 banks, they're literally taking money because people have been scared of these regional banks. They have been putting it in the large banks. Now, these large banks, those that I just said, and more, are now taking that money that they got from the regional banks as new deposits. They're taking that money, and to shore up First Republic, they're actually putting the money back into First Republic. They're putting it back into a bank that money has flowed out of because people are scared of it, and they're putting liquidity via making deposits. So those people's money is going straight back into the bank that they just left. How does that make any sense? And they're encouraged to do this. Why? Because they're trying to, it's under the guise of saving these banks. But my problem is this. You're trying to save something that maybe need to fail, because if you don't, you're creating moral hazard. But they don't care about that. When it's supposed to be laissez-faire, where you have the government is separate, but the government is inducing and encouraging these banks, and they're probably backstopping them and giving them backdoor guarantees saying, look, put this money with these banks. We got you on the back end. And they can do that through special assignments of assets that the Federal Reserve can place on the major big banks. So essentially, they're backstopping the big bank so the big bank can put money into the little bank so the little bank problem doesn't roll up to the big banks. That's essentially what they're trying to do.
That's certainly not something that we're encouraging.
That is happening right now.
That is happening because depositors are concerned about the bank failures that have happened and whether or not other banks could also
No,
fail.
it's happening
And
because you're fully insured no matter what the amount is. If you're in a big bank, you're not fully insured if you're in a community bank.
Well, you're not fully insured. And
you were at Signature, and it just barely met that threshold. You were at Signature.
Well, we felt that there was a serious risk of contagion that could have brought down and triggered runs on many banks. And that's something, given that our judgment is that the banking system overall is safe and sound, depositors should have confidence in the system, and we took these actions.
So there's a special assessment that's been done on community banks in my state and all banks across the country. Was there any discussion that that special assessment would only apply to the larger banks, or was it always assumed the special assessment would cover every bank, including rural banks in my state?
I think I'm not certain what the rules are around that. That's for the FDIC to determine.
It has been reported publicly that SVB had a large number of Chinese investors that are there, including some that were companies directly connected to the Chinese Communist Party. Will those individuals, companies, entities, and investors that are Chinese investors be made whole based on assessments in my banks in Oklahoma? So what I'm asking is, will my banks in Oklahoma pay a special assessment to be able to make Chinese investors whole from Silicon Valley Bank?
Now he's saying special assessment. So special assessment, basically they're assessing fees to compensate and to make up for it and say, hey, you guys, it's almost like an HOA and a condominium. You say, hey, everybody needs to chip in to make sure we've got this backstop so that the problem doesn't pass on to you. Even if the company or the bank hasn't had an issue, and even if the bank's balance sheet is rock solid, they're saying that, well, yeah, you need to pay in on this, basically. No different than like when you have a special assessment in a condo. You have a special assessment and they say, hey, we need to go fix the plumbing. So we're going to have this special assessment and everybody's going to have to cough up an extra $500 within 3 months to go ahead and pay for, you know, new piping or new electricity wiring in the building. So that's what they're doing. They're basically saying that we're going to spread this cost amongst everybody, even if it doesn't necessarily involve the person, or excuse me, involve the bank in terms of them actually being at risk. So that's what he's objecting to. He's saying that basically in Oklahoma, where my banks are fine and there's nothing wrong with them, now they're paying an assessment for a problem that they didn't create and they're not even actually being affected by directly.
Uninsured investors will be made whole in that bank, and I suppose that could include foreign depositors, but I don't believe there's any legal basis to discriminate among uninsured.
I get it, but I'm just saying that my community banks are going to pay this additional fee. It is always fascinating to me as well, the conversation that taxpayers are being made whole in this, that taxpayers are not going to have any kind of consequence on this. I'm sure my bankers are going to be very excited to know they no longer pay taxes, and their banks no longer pay taxes. Credit unions don't pay taxes, banks do, and so they're definitely taxpayers as well, and all banks make their revenue off of rates and fees and such to their account holders, which means every Oklahoman will pay higher fees in their community bank.
We're just going to have to move.
And basically, he's saying that because of these new assessments that are being placed on these banks that weren't even necessarily affected by it, they're taxpayers. The banks themselves pay taxes. You know, a corporation is a legal person, right? So these corporations pay taxes as well. And it's saying that their depositors, the customers, are taxpayers as well, and that they're actually paying through it. They're actually paying for this because it's going to be a pass-through. They're going to pass the cost of that down. That new incurred cost that the bank now has, they're not going to just simply absorb it. They're going to pass it down. And if they don't pass it down now, they'll pass it down sometime in the future via some kind of increased fee or account maintenance fee.
Collapse of the banking system and its economic consequences that will have very severe effects on banks in Oklahoma that will also be threatened.
I'm just worried about the long-term.
We are going to have to move on,
well.
or we're not going to get all centered.
Okay, so basically, she's saying that, you know, well, if we don't intervene, then you guys may not have a problem now, but you'll have a problem later. Well, guess what? It should depend upon the strength of each individual bank to handle that. It shouldn't be the government coming in and saying, hey, we're going to force you to cover this because we want to stop this, what we call systemic spread that is going to pass through everything. Now, could it be systemic? Possibly. If it is systemic, it's a good thing. Why? Because it's showing a weakness. It's saying, like, look, you are systemically weak. What they're trying to do is say, well, we're going to cover up everything, and we want to cover up the systemic weakness, and we want to artificially backstop this thing so that that weakness is not exposed and that Band-Aid is not ripped off, and then people are forced to say, you know what, we need to run the company in a different way to make sure that we don't need to get any more government bailouts, or we're going to run it more prudent. We're going to have our risk metrics changed so that we don't have to worry about having these types of issues, right? But you create the moral hazard because now the bank is just going to say, well, we're not going to really deal with it because we'll just get bailed out. the government will come in. And that's why I said we're not living in a capitalistic world, the capitalistic world that they're telling you that we're in. We're living in a crony capitalistic world. And that's basically when the government comes in and you have an agreement between the government and private enterprise to go ahead and prop something up. And that's what you're having consistently. It's not because of interest rates. You know what it is? It's because of the inefficiencies that you have in the ability of these companies to go ahead and appropriately assess the risk that they have. That's what they're not doing. That's why they're in trouble. The same thing that happened in 2008, you're seeing it all over again. You're seeing there's starting to be rumblings of bank issues. And because of 2008, now they say, well, we're going to get ahead of that. Well, no, you don't get ahead of it by artificially combing over it and artificially putting liquidity in banks that they really don't have, just to say we're going to, no, that's not solving the problem. That's merely helping a symptom. Excuse me. That's really just maintaining the same issue you have by addressing the symptom. You're not actually addressing the problem. And the reason they don't want to address the problem is because, honestly, they know that a lot of these banks wouldn't exist, which they shouldn't. You know, tell me what you guys think about this. Do you guys feel that these bank bailouts should happen, or should some of these banks fail? You know what? I feel like we're in that society where everyone gets a trophy, right? Everyone needs to get a participation trophy. But I grew up, and many of you that are listening to this grew up in an era where you did not get a trophy if you got 8th place. There is no 8th place trophy. There was a first place trophy, and maybe if you're in that kind of environment, there was a second and a third. Okay, what does the song go, or how does the saying go? 2 is not a winner, and 3 nobody remembers. I know Nelly got that quote from somebody. I don't know who, but his song "I Am Number One." Who is winning in this in the end? Are we as customers and retail consumers winning when these banks get bailed out because they can't quantify their risk, even though they have all this money and they tell us that they're the smart ones? They know how to do these things. Let us handle it. Tell me, guys, what you think. Tell me what you guys think in the comments, man. I don't agree with all this, because we all see where this is going. We see in France, they're having issues with their pension programs right now. Do you guys remember that? Remember that in Greece? They're having problems with their pension programs. And remember how there was a supposed non-systemic issue of subprime loans? The Federal Reserve Chairman, Ben Bernanke, said there's not an issue. It's not systemic. And then what happened? We found out that it was an issue and that it was systemic. But you see the same things that were brewing back then. You're starting to see the same things now. Banking issues. Countries in rioting over pension issues and pension payout issues. It's literally the same damn play. You just got different players that are coming in to this play. It's different faces and maybe different labels and names and names of companies, but it's the same damn thing. I don't know if this makes you guys hot, but it makes me hot, because I've seen this already. I've seen what it's done to the economy, and I've seen how these guys that are getting bonuses and getting pay increases when everything else is falling apart in that company, and they're still getting these things. Do you think it makes sense? Do you think it's fair? Talk to me in the comments. Hope y'all have a good day. Peace.